If you're a crypto holder like me, you probably don't enjoy bear markets either. But as I stand here and I record this video, I do understand the opportunity and the power that lies within a bear market to prepare and accumulate for the next bull market. But as we do go through this crypto winter and we see what's happening with the stock market and inflation and rising interest rates, and we wonder how bad is it going to get, I can't help but ask myself the question, is it as bad as we think? What's up, everyone? Welcome to Crypto Capital Venture. Thank you so much for coming by. I just want to answer the question at the beginning of the video, and I'm going to show you exactly why I say this, but it's not as bad as we think. At least it's not as bad as I think the headlines are making it. And let me just dig into this and discuss why that is. And we're going to look at Bitcoin charts on the macro, and then we're going to intertwine the S&P 500, and we're going to look at the situation for what it is. So first things first, when we look at the Bitcoin macro chart, Bitcoin right now is putting in a higher low, and it's doing so in the middle of the 2020 halving and the 2024 halving, which is yet to come. It's doing so in the middle of these two areas. This is a move that Bitcoin has done in previous halvings. It is extremely commonplace to Bitcoin. Now, if we take this further and we take a Fibonacci retracement from the last bear market low, and I just did a video about this, to the bull market high, we have this green rectangle. Now, this is a retracement area. Now, the line to pay attention to is this 786 line. So basically, Bitcoin pulling back 78%. You can see Bitcoin has done that right to that yellow line, the 786 at the bottom of this green rectangle. What I really want to note here before we start looking into what's going on with the stock market and where we are in the middle of this bear market, look at the previous cycles and what Bitcoin did. And this is so important. This is probably the biggest data point for me when I'm trying to make macro long-term decisions with crypto. Here's the 786 line of the 2018 cycle, the bear market low. Bitcoin consolidated below it by 26%. It fell 26% below this 786 line. If you go all the way back here and we look at 2015 bear market low, you can see Bitcoin bottomed out and saw its bottom 47% below the 786 line. It's kind of just that final capitulation area for Bitcoin. If we just take the average of those two areas for Bitcoin, of these previous bear cycles, you can see Bitcoin, maybe let's just say 35%. What if it dipped 35% below? That would bring Bitcoin to around an $11,000 Bitcoin. And in that area, if that happens, as I do this video and we anticipate the possibility, I'm not saying I think it's going to, or it's definitely going to. This is not financial advice, but if it were to happen, that move from historical data alone, from what Bitcoin has done every cycle, would be actually extremely on point. It would be so commonplace for Bitcoin. So with that alone, as we sit here and we trade around $20,000 for Bitcoin, I do not think it's as bad as many are making it out to be. There is a bear market happening. The last bear market wasn't nice either. It didn't feel good, but it happened. And the data is consistent. Now here we are, we have these headlines. This wasn't happening back then. I understand that. And that's why we do have to look at the stock market. We have to look at what's going on over there, but there's kind of a silver lining to that. So here's a headline: stocks hit session lows. This was just today, and I record the video. It's August 26th. You might be watching this the next day. Losing 700 points. Stocks sold off sharply Friday after Federal Reserve Chair Jerome Powell said in his Jackson Hole speech the central bank won't back off in its fight against rapid inflation. Is that really news? Is it really news? We knew they're not going to back off. The rest of this year is going to be extremely volatile. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Come on. We knew that he was not going to be loosening policy, and at least in the speech, not going to mention that, right? Going down a little bit, you can just see real quick, it was fine. It was hawkish enough, but it wasn't over the top. There was expectations for a very hawkish speech, so it's hard to measure up to that. Now, if you scroll down, here's where things get kind of interesting. I think we've seen a lot of evidence this is turning out to be a soft landing. So this is a sentiment I think we might start seeing, that this entire bear market that we're in right now, even for traditional markets, might not be as bad as many are making out to be, meaning not as bad as what we saw in 2008. And this is where things get very interesting. And this is where we start really watching what is going on with S&P 500 and how it relates to Bitcoin. So for context to what I'm about to say, I want to just show you a quick clip. This was from the end of July. I did this video. Check this out about S&P 500. So yeah, maybe we get this continued rally, maybe to the 50-week moving average. We wait for confirmations at that area, meaning resistance, or maybe even a breakout, bullish confirmation. So S&P 500 trading just above 4130 when I did that video. Now here we are. Look at this chart. It made its way to the 50-week moving average right here and saw the resistance that we were anticipating. We did not get a nice bullish close above. There was no bullish confirmation at all. And this is why we wait for these things. And now here we are on this chart. The reason we're discussing that is because the move that has happened with the 20-week moving average falling below the 50-week moving average is a move so similar to what happened back here in 2007 into 2008, and then the 2008 stock market crash. We know what happened. Now here's the move of resistance off of the 50-week moving average. This is essentially the move that just played out for us in the last week or two. This move all the way back here in 2008. Now here's the chart now, the resistance off the 50-week moving average. Now this is what we have to watch for. And this is my opinion. I don't think it's going to get as bad as we saw all the way back here in 2008. From the rejection at the 50-week moving average, this chart saw a drop of over 50%. If we go to the chart now, here's what I think could potentially happen, especially in an environment of a soft landing, which is what we just talked about. Off of the 50-week moving average, I could absolutely see another lower low in the vicinity of the 200-week moving average, which is yet to be touched on this chart. That's around 18% dip, 17 to 18% dip, and I could see maybe even a quick capitulation below. The 20 to 25% area on the S&P 500, I think, is a nice cushion of space to allow the markets to cool off, to allow the emotions of the market to especially cool off, because let's face it, it's the headlines. It's this repetitive nature of fear that's just being pushed out there that just people, human beings, need to absorb. They need to get used to it. They need to just work their way through it. And that's how these markets do that, through consolidating, through forming bear market structures. It's working through all of this stuff that's being thrown, the negativity that's being thrown at it. It is a bad situation, and we need to let the markets work through that. Now, if it's not as bad of a situation as 2008, then it will be a softer type of landing, and the consolidation will not be as volatile. It can be sideways, it could be down, there could be mass fear and capitulation in an environment 20% down to the downside. But if that happened with traditional markets, let's go back to the Bitcoin chart. There is space for Bitcoin to see more downside, and it's still not out of the ordinary when we look at historical data that we just looked at, that I opened this video with. Remember, trading below the 786 in 2018, trading below the 786 line in 2014, or 15 back here. And if it happened again, once again, it would be extremely commonplace. Again, this isn't financial advice. I've tracked these charts for years so that I have a kind of a general grasp and understanding, so that I can take all of the historical data, I can chart it, and I can just look at the possibilities. Look at real world scenarios. What could happen, so that we can anticipate ups and downs and just be ready for it at any given time in any given scenario. I just uploaded a video talking about the emotions that are within these markets, getting rid of those emotions and how important that is. And by tracking the data and by looking at what Bitcoin is doing, and by understanding at the very simplest level on these zoomed out charts that Bitcoin is in a very commonplace move right now, it really allows us to think objectively and to just take a nice approach to these markets without getting wrapped up into the headlines. So this is how it's all coming together for me. This Bitcoin chart looks fine. It's not fun to go through a bear market, but it looks fine. And even if the S&P 500 were to just continue to the downside, and we're going to continue tracking that, if it just continues to the downside and we get kind of an area of capitulation similar to the COVID swing low, if we get a move like that, one thing I do know is there's still room on the Bitcoin chart for that downside, and we're going to get through it one way or another. I know that for sure. So I appreciate all of you coming by. I thank you for watching this video. Please let me know your thoughts in the comments below. I will see you in the next video. God bless.